How's it going, everyone? Mario here. We have a special guest today to discuss the markets, Dr. Actually himself. If you're a part of the community, if you join the live trading every morning, you must have had the pleasure speaking to him. He's a full-time trader who's been trading for almost 7 to 8 years right now. I personally learned a lot from him when I started trading. I hope he adds value to you as well. We are going to discuss the markets, the watch list which we have into next week, and how we are planning on executing the same. Ladies and gentlemen, welcome ErichPryde.
Thank you, Mario. It's an honor and a pleasure to be here. I really appreciate it. I'm going to start by looking at SPY real quick. We've had a couple of fantastic weeks in the markets. I had some data on like how many weeks in a row we've been up. We closed over 500. We really don't have any resistance above, but we don't really have any reason to expect that it will continue up endlessly. So there's no reason to think that we might sell off. We're above a rising 5-day moving average that most people are aware that Mario and I use a lot. If we do start coming down, I'm gonna move down to a 30-minute chart. If we do start coming down in price, we're gonna start looking for some kind of, price action maybe around 498. And then again, down here in the 494 area would be my areas of interest. No reason for caution unless we get under this 5-day moving average. On my chart is orange, and it starts to roll over and become negative. We have been up. 14 weeks of the last 15 have been green. And I think I read a statistic online that said the last time that happened was in the 1970s. So it's been about almost 60 years since the last time we had this many green weeks, not in a row because we have one red week here, but this many green weeks. So the market does feel to both Mario and I a little bit euphoric, like it's just been going up. There's been no sign of correction. And like I said earlier, there's no reason to become bearish until we start to get under that declining 5. But it does mean that we're being cautious and, not just suddenly buying new positions by the armful up here.
So for the last few weeks, semiconductor space have been performing pretty good. So what is your take when it comes to the stocks like Nvidia or the ETF SMH on its own?
SMH up here at highs, well above our previous area of interest and pivot. So it's kind of the same thing here. Nvidia is leading the charge in the SMH. No reason to short this market at all, and no reason to think that it can't possibly continue higher. But again, it's kind of the same thought here. We've seen the leaders here like Nvidia and SMCI really move hard.
So it boils down to the category of innocent until proven guilty. As long as it's above the 5-day moving average, we are not interested in shorting SMH either. So now let's move on to individual sectors. Let's talk about XBI, the biotech.
All right, moving on to biotech. This is a 65-minute chart of the XBI. We had this thesis that this might roll over against this pretty clear level of distribution here, where you can see it's acted as kind of support, it acted as resistance, it acted as support. And again, we saw clear signs of selling at this level near $90. We kind of had this thesis, maybe it would roll over and hit the 50 and get trapped. And instead, what's happened is we've gotten back above this level. The biotechs look pretty good here. We're above a rising 200-day moving average. This is a daily chart, and above a rising 50-day moving average. Moving out to a weekly chart, we're right up against this level. Basically the same place, $90 to $91, where if we can get above this, these might get a pretty good move off. The only name that we're kind of talking about, interest in, Mario and I don't trade biotech names, but the only one that we're kind of looking at all is CRSP. And CRSP Therapeutics reports earnings this coming Tuesday. So we're going to wait for the earnings to see if it's even tradable or if we just remove it totally from our list. But with the same kind of thing, there's a band in here where we are seeing lots of sellers step in, moving to a 65-minute chart. We got above this kind of 67 level, and there's actually an AVWAP, an anchored volume weighted average price from the inception up here at real close to this area where we previously saw price get trapped. And you can see it spiked up and then came down and closed below, basically mid 73. And that AVWAP is basically right in that zone. And that's why that selling took place. So what we want to see ideally is this gap up and start holding that inception VWAP as support.
All right, so when it comes to NASDAQ, whatever Eric said about SPY holds true here as well. We're trading a new all-time high. Looking at this chart, I don't have anything to complain about in particular. Still in an uptrend, still above positive 5-day moving average. There's no reason to look at this chart and go, I'm going to buy a bunch of short positions to catch the top. So again, you don't need to catch the top to make money to the downside. You don't need to catch the bottom to make money to the upside. You just need to be in the direction of the trend. So let's wait and see how the market reacts into this week. And I'm not interested in shorting this tape. And as Eric mentioned, we have been a bit euphoric for quite a few weeks. If I go to the weekly charts on QQQ, we have been having consecutive green days other than this one particular red week, which we had for the past few weeks. So be a bit cautious with the position sizing with whatever you open here. I'm not saying this is going to completely roll over. If it rolls over or if we get a retracement down the road, make sure that you are positioned in a way that you're not going to be facing a lot of losses down the line. With that being said, this is a beautiful looking chart. This is still an uptrend. If I go to the 15 minutes, we're still above the positive 5-day moving average. So leading into next week, if they do retrace, watch out for this 430 zone, which has been acting as a previous supply area on QQQ. If they retrace towards there, let's wait and see how the price reacts around that area, and we'll take it from there. We'll handle it real time if they do retrace and if they do roll over. This is still innocent until proven guilty, and I want to treat it that way until proven otherwise. All right, then we'll go over Russell 2000, the IWM. This chart is a funny one. This thing has an ability to trap a lot of traders, and the weekly chart right here in front of you tells a story. They've been consolidating throughout the entirety of 2021. They broke down. They've been consolidating throughout the entirety of 2022 to 2024, doing absolutely nothing when SPY has returned an average of 20% last year. This thing absolutely didn't do anything. We are watching this 198 zone for almost like 3 to 4 weeks now, and they've been consolidating under it. Maybe it's time they break out. Maybe it's time that they're just going to break out and run all the way towards the 209, 210. No need to open any positions on this name for me at this moment. This is the type of chart it's good to look at, but I don't want my money to be in part of it in any way, shape, or form, because I've seen what happens before every time it breaks out. And maybe this time it's different. That's what people said in 2021, 2022, 2023. They weren't right. Think of it this way. Let's say if SPY and QQQ corrects from where they are staying at right now. IWM is trading exactly at that supply zone at 199 to 198. What's the most likely scenario to happen to IWM if SPY and QQQ corrects from where they are trading at the moment? Most likely scenario is IWM is going to correct with it as well. Where to? We don't know. We'll handle it when it happens real time. But that being said, if you look at the weekly charts, you can clearly see this is the only market indices which has not been performing good compared to the broader markets like SPY and QQQ. And I don't see why there should be any reason to be involved in this compared to that of SPY or QQQ at the end of the day. Eric, I would love to hear your ideas about IWM. Take over. Let me know what you think.
So I'm with Mario on this one. The IWM has done a lot of nothing since I started trading as well. It's corrected from levels more often than it's done anything. And I think that it's kind of unreasonable to expect this small cap space to break out, because when individual names from the small cap space do break out, they stop being small caps. So it's perpetually tracking small caps. Now, it would be great if the whole space broke out, and that can eventually happen. But I do agree, we really have this band 198 to 200. I think that if it starts to correct, we start putting our eyes on 194 as an area of interest, which is where the 50-day moving averages close. And we've seen a lot of signs of accumulation that occurred at that level. There was a gap back in 1214. And then, also when it sold off, it got accumulated there. It broke down below, it held it again as support. So that's potentially a area of interest. But honestly, our focus as traders is not really on the indices themselves. Our focus is typically on individual names that might be in this indice, might be in SPY, that might be in Q, that are moving up, have clear uptrends. Because if you want to beat the indices, you typically can't do it by trading the indices unless you have a good strategy. Mm-hmm. Okay, what have you got next, Mario?
I got Palantir. We'll move on to the individual stocks. Enough about these indices. Let's talk about this name. The funny thing about Palantir, if you go to the weekly chart, I think we discussed it last week. This weekly candle logged a volume of 1.206 billion.
Billion.
With a B.
Billion.
Yeah. So this is like the highest volume ever logged on a weekly candles.
Mario, would you mind flipping to a daily chart real quick? And let's just real quick explain to whoever may be watching why we are interested in this name. So the reason that Mario and I are looking at this particular chart, and there are a couple of others that fit the same criteria, is this is called a PEG, a power earnings gap up, and these occur when institutions are willing to pay a significantly higher price because something fundamentally has changed with the company. And on the chart, that results in these big moves up with a huge gap on very high volume. And that tells you that the institutions, and their time frame is what, 6 months, 12 months, 2 years, we don't know. Their time frame is much longer. And if they're willing to pay this $20 to $25 range nearly on this name, then they think that in 12 months time, they can make a significant amount more than what they're paying today. And that's something that we're interested in seeing because it means that it can set up in the future. Mario, back to you.
All right. So when it comes to how am I going to monetize the same move to the upside, on a few days back, I think on Wednesday on the Zoom, we took this trade from 21.99 and change, and we captured our 3 Rs, and we are out of most of our positions on this trade by leaving some runners on the table. I want to add back to the runners if I see a retracement back down towards this 22.80 and then start showing strength thereon. This is still a great looking chart, and there is no reason for me at this level to absolutely get rid of all my positions. I want this to retrace back a bit towards this AV wrap coming from this breakaway gap of candle. If they pull back towards this 22.80 and change and start showing strength here on, I'd be more than interested in averaging up on my positions to complete my positions and move my stop losses up to the recent higher lows. It's still a great looking chart, and I hope it pulls back towards this 22.80-ish zone and give us another entry. But again, if it didn't, that wouldn't surprise me either, because this is still in a strong uptrend, and that's one of the main reasons why we always leave some runners on the table. If the stock keeps pushing all the way back up higher and break this $25 zone and keep marching towards that next supply zone at 27, our runners are going to monetize the move to the upside. But if they do retrace, that's going to offer us an opportunity to add more to our positions, provided they hold on towards this 22.50 to 22.80 zone. This is the plan for me for Palantir leading into next week. And one thing to add, I'm absolutely not short on this name. This is a strong uptrend. There's no reason to look at this chart and go, oh, it rallied too much, I want to buy puts. No. Strong uptrend, staying in the direction of the trend. If they retrace back towards 22.50 and change and start showing strength from this area, I'd be more than interested to add more to my initial position to average up on my trade and move my stops up accordingly to capture another 3 Rs to the upside. Eric, I heard that you have some positions on Palantir as well, and how will you go about managing the same? Take it over.
On Palantir, my plan here basically is the same. This runner is small, and I think from here I would let it stop out under 23.08. And then my goal here is for this to, through time, form some sort of a level, a horizontal level where I know it's going to, break back out of. There's no guarantee that it'll do that, but most of these pegs, that's what they tend to do through time. And if you can get a good entry off of those, then typically you get some pretty strong moves. We've actually been involved in a number of these names in the past. One of them was ESTC. That we have been in and out of. It had kind of a peg move up. I don't remember all the rest of them, but pegs are definitely something that we put a lot of emphasis on trying to trade. All right, so Palantir, we're going to move on to a totally different kind of chart in a totally different sector. This is Toll Brothers Inc. And this is something that got an idea from this off of Twitter. Some of the CMTs are involved in this name. It's in an uptrend. It has a rising 200-day moving average. It has a rising 50-day moving average. Everything looks pretty good about this. It's right off of all-time highs. Great looking chart. Not a huge mover. The ATR on this one is $2.43, so about 2.5%. Nothing major. But we've got this really nice, clean level where we know sellers are consistently stepping in, right over $101. You can see where it was bought here, and then it broke down to this level. It was support, it was breakdown, it was resistance, Very briefly, support resistance. You can see these long upper wicks that tell me that we have sellers, and we've got kind of a trend here. There's an anchored DWAP hanging out in the same area, the high 100s to 101, and we have this very clean consolidation here, basically, kind of between high 99 and 101. So it's now moved above this trend line cleanly for the first time since this trend formed back in January. And we're over that. I want to see a breakout over 101.20 to purchase this. Basically, 101.21 was the high the other day. So if we get above 101.21, I would buy this at 101.22. Right now, my stop, I'm going to move down to a 30-minute chart. Right now, my proposed stop is down under 99.04 and 99.09. That general zone, I haven't exactly defined where I want it to be, but basically under the lows of these candles. And that's just under 1 ATR. I don't want to risk a whole lot more than that. This is also not something I'm going to take a full size in because it's not a huge mover, and I'm more interested in some of the other things on our chart, but I think it can give us a really good trade opportunity. And then my goal from there is going to be to cover some of my risk as it moves up, and then I'll just move stops around. Moving on from Toll, great looking chart here, nothing to complain about. Let's move on to GTLB. This is one that we actually recommended and took this last week in Mario's Discord. And our entry was, I'm going to move down to a 2-minute chart, and I am going to zoom in on this price action here, which is where it moved up. We got up through, this is one of those ones where our proposed entry was actually down near 73. And instead, we got a gap up. We don't chase gaps up ever, right? This is a Brian Shannon quote, we wait for VWAP. So it was shaky around VWAP. It didn't really close concisely above or below with these 2-minute candles. And then we finally got back above, and our entry was 74.42. And basically right when we got back over VWAP, because we're outside of the first 10 minutes of trading time, and it ran, and we've already trimmed our position. I have stops right now, and I may readjust these going into Monday, but right now I have a stop at 75.03, which will close 1/3 of my position. I've already trimmed. It'll close 1/3 of my position at a win. And then I have another stop down under 73.41. That might be a little bit low, but I want to give it a little bit of space because just in case the market shakes out, this is still a great looking chart. So I want to give it a little bit of space, but maybe I'll get shaken out and then it sets back up. So this chart is currently at 52-week highs. It's currently looking great on the weekly chart. There's not really any reason to think that this can't go higher. I'm definitely interested in this name moving forward and hoping that I can hang on to that position. Mario, back to you.
When I look at this weekly chart, I don't see any major areas of interest until that 94.45, which is the IPO price when they actually started trading. 94.45 is that opening print of that particular day. I'm not saying it's going to go all the way there by next week or the week later, but that is the opening print on the IPO. So something to keep in mind.
When Mario and I recommended this trade earlier this week, that's exactly the level that we had outlined. It was real close to $94. I think that we don't set price targets. We don't say, yes, it can go up to here, but once a chart has moved sufficiently past any major area of interest, you can start looking for those upside targets of interest. And, if it doesn't get up there, if it stops us up, steps us out, maybe it'll set back up.
All right, beautiful. So now let's go over the next ticker which we have on the watch list, ARM.
I tend to be a lot more patient with these pegs because for me, ARM I'll probably buy on Monday. But for me, I know that if this doesn't work for me on Monday, ARM is 100% a chart that is going to work for me, in a month. It's not, I don't think it's done. I don't see any reason why to think this is done. You have ARM up on your screen, right? So just looking at this chart, this IPO'd recently back in, September 14th, we're way above any IPO level. So, we don't know what it's worth. Investors are projecting that it's worth a lot more. And I think that I'm going to have a lot of opportunity to get involved in the future. So for me, I'm content to be a little bit more patient. But as far as entry, what is you were saying 114 as your level of interest on Friday, right?
Yes. And I want Monday to open about 114, come back towards that 114.30-ish zone, find buyers, and then recapture
And
the
then
intraday VWAP. That is my thesis. That's what I typically wanted to see from these types of names for me to get involved for a swing positions with a well-risk defined trade. Why 114? Because there are multiple confluences. Number one, this horizontal level right here around that 113.50 to 114 zone, which coincides with the lows of what they had on that gap up day. And that also coincides with the AVWAP, which is coming from this break on runaway gap up candle right over there, coinciding with 114.30-ish and change. I want price to open about this price point on Monday. If they can hold this horizontal level and the intraday AVWAP and the AVWAP coming from the breakaway gap up candle, I'd be more than willing to establish my positions on, and my initial stop losses on that position will be 112.56. And if they continue to break out and start pushing up above this 118 zone, I would be happy to average up on my position and moving my stop losses up on the position. This is a great looking chart, and I don't have anything to complain about this name. It's a beautiful post-earning power gap move. New name, so we don't have any meaningful overhead to the upside for now. So we'll wait and see how this one goes. Maybe one of the best trades which we have in 2024 if it sets up. So we'll wait and see.
Yeah, the mid 118 level does look pretty significant to me. You can, really see where we started to consolidate on a 208 throughout the kind of the midpoint of the day. We were hanging, kind of right above that 118 area. And then when we started to break down into the end of the day, we were underneath it again. And then it was, real close. Our highs were in the high 117 on Friday. So definitely an area of interest to look at in that name.
Indeed. So this is what we're keeping an eye for ARM. And we do, Eric, do you want to go over CARG?
Sure.
In the Zoom a few days back with the gap down, we're almost taking this one off the watch list a few days back, and now it's right back in the area where we were interested on getting involved on this name. So we're going to go over it real quick on how will you take care of trades like this. So for example, I'm pretty sure there are a lot of new viewers here. So they see these types of levels as, it gapped down and we removed it off the watch list. Now it's right back on the area again. So if you want to trade this one, what made you remove it off the watch list, and what will make you consider re-entering the setups like this down the road? Okay. So you can take it over.
So I'll just go to a daily chart on CARG. I guess my thing is with this is we've got a lot of shakiness in the candle, so I have some hesitancy there. And at this point, we completely failed, broke down, got under what my proposed stop was, which was basically 23.50, real close to that area. This has an ATR of 58 cents, so it moves just a little bit over 2%. And it moved so sharply against us on this day. It didn't get above our entry, which was, right over these local highs here at 24.10. So let's say that entry, the proposed entry was 24.11. I actually ended up taking a very small piece, about a quarter of a risk unit, right before that breakout. And we got a shakeout, and then boom, it stopped me out, minimal loss. But now we're all the way down back to 23.25, holding this rising 50-day moving average. But now it's expended, it's moved all the way back up to nearly $24, which that's just over one ATR of movement, but still. So now it doesn't really have this setup here. This is a great name to talk about, by the way, because it's not a matter of the stock moving up to our entry. That's not necessarily a good enough reason to buy it. We really want to have some indication that institutions are also willing to support this move, not just us as retail traders. We can't support this. And I was really hoping it would hold this 2380 area, which you can see has been, look, this is where it gapped down from. Look at this distributive candle here. This was support here. You can really see where this high 23 area to about 24 has been an area of interest. So if we can set up across 2380, maybe we can get a piece of it in the future. The daily chart looks good. It has a rising 50-day moving average or a rising 200-day moving average. The weekly chart on this name is kind of right at an area of interest, right here right under 24. You can see where it was support back here. We broke down from that level. So maybe it can get moving. I'm not super keen on it yet. I would really ideally like to see this set up for just a little bit. All right, NTAP is an interesting, we're moving on to NTAP real quick. NTAP is an interesting name that we kind of had Mario and I have been watching this for 2 weeks now? probably. Certainly the month of January, we really wanted to see it kind of move above this like 89, 88, 70 to 89 level here. You can see where this is an area of interest. Boom. It was resistance, it was support, we broke down through it. We've had a lot of action here. We wanted to see it above this level, but this name would either gap above it and then break down, or wouldn't do anything. But now we have corrected down to a rising 50-day moving average, and then we shot off of that and we're back up above this 89 level. So if we can settle out here, maybe this can give us an entry into the future. Looking at the daily chart, you can see that this is another one of the pegs, the power earning gaps that we like to look at. On this day, the prior average volume was 1.4 million, and on this day it ran 8.4 million shares. So that's more than 5 relative volumes, which is one of our criteria for looking at pegs. And you have a similar kind of horizontal level at 88-ish. Looking at it on a weekly basis, what's not to like about a chart that if it can move up above this level is right off of the all-time high. So there's a lot to like about this chart. What we don't like about it is how shaky it's been. So we're hoping it can set up. Mario, would you generally agree with that, or do you have a strong thesis here?
I do agree. So this checks all my boxes. The interesting thing about about the process which I have and Eric has, is most of the time when we discuss different price actions, when I put on an AVWAP at these gap up candles or the recent swing lows, the horizontal levels which he has versus the VWAP often always coincides with one another. So he will tell me his levels. It also coincides more or less with the VWAP which I have on my chart. So it doesn't matter which way you analyze the price. The interesting thing about technical analysis, the reason why it works is more or less it revolves around that particular areas of interest. So that's what we're looking out for. So right now it checks all my boxes. They bounced off from the 50-day moving average and they're above this AVWAP, which is coming from the previous earnings candle. And now I need this about $90 and change. I need them to close above the $90. If they do, well, there is absolutely no reason for me to complain about this name, because this has potential to run all the way up towards this all-time highs at 94 and 95. And that's going to be a beautiful trade from where it's sitting right now.
Neither Mario or I is a pattern trader. We don't really put emphasis on pattern because patterns form against levels of price. They form against areas where people are doing business. And so like you have these retracements, but if you look at this, you could imagine that it looks a little bit like some sort of an inverted head and shoulders. It's not really, it's forming in an uptrend up here post peg, but you could say it's forming against two horizontal levels or several VWAPs. And maybe you're a pattern trader and you're viewing this video and you're really into patterns and that's what you want to use. So, here's an example where you're also seeing the pattern shape against the horizontal level, shape against the VWAPs. And, maybe this is a good chart for that reason for you.
For now, if I want to get involved on this name, I need a little bit of basing around this $90.20 range. And if they can recapture the intraday VWAP from Monday and start breaking out about this $90.32 zone, which was the highs which we made last Friday, I'd be more than interested in getting involved in this name to that trade towards that $94 to $95 up north. So of course, the markets need to be in our direction for any of these setups to work in our favor. As long as SPY and QQQ are still in an uptrend and they're not showing any signs of reversing anytime soon, and as long as that's in our favor, as long as this thing recaptures $90.33, I'll be more than interested in longing this name for a trade towards that 94 to 95. And my potential stop losses on this, if I enter at $90.33, especially with a full size position, number one, a tighter stop loss will be $89.60. And if they broke out and push all the way towards that 91.50 zone, I would trim most of my position and move my stop losses down to $88.46 on the rest of the positions, whatever I'm holding. So that stop losses will be kept at 88.45. And as long as it keeps pushing up towards that 91, 92, or 93, I'll keep moving my stop losses towards the recent higher lows, whatever the stock is logging. And that's what I'm looking out for NTAP. Absolutely beautiful looking chart. Waiting for it to recapture 90.33. And if they do, it'll be a go for me. Mm-hmm. On Tuesday, we got this CPI data showing up at 8:30 in the morning. I think we discussed this a while back, how the significance of CPI slowly fading away as the day goes by. So
Right.
do you want to go over it real quick? It's all yours.
No, I agree with you. I think the only thing Mario and I had commented at is like once you get into a significant market trend, data like news and catalysts tend to break in the direction of the trend. So bad news tends to be ignored or lessened in impact, and good news tends to accelerate the trend. So in our thesis, I think that there's a lot of retailers still putting a lot of weight on CPI data, but the market has been clearly saying for months, like it doesn't really necessarily care, or the news is quote good. And we're price traders. We trade price. We're not worried about news. We're worried about what price does to news. So CPI might be worth looking at on Tuesday, and it might not cause any sort of anything at all. Or maybe the market reverses on Tuesday, and then everyone says, oh, it was because of CPI. Whatever reason, whatever happens, we will explain it afterwards, whatever the result is. That's my thoughts on news.
Agreed. So if you're a new trader, I'm pretty sure especially if you started in 2021 or 2022, it's so easy to get stuck in the past thinking that CPI moved the markets in the past, so it should move in the futures down the line. So I'm pretty sure, Eric, in 2018, CPI just used to be another data. Markets never cared about these CPI events.
It was interest rates. First, it was volatility. Then it was interest rates, and then we had the trade war. There were all sorts of things that were market impacts, year after year after year. And then it was COVID data, and then whatever. So the market always puts emphasis on something in the news, or it seems to. But if you just follow price, you don't really have to worry about what the current event is. Now, that doesn't mean you should ignore current events that can cause the market to move. You need to position carefully around them, and not try to take bets into things that can impact things binarily. But that's really all I have to say about the news. I'm not really a news-driven trader. I know some people really put a lot of emphasis on the news, but I think you can see it in the price. These are trade ideas where we have a defined area where we know we are wrong, and we will stop out of these trades. And that is going to be, based upon our risk unit, which is between 1% and 2% of our total account. We're not risking huge amounts of money. We are looking to use technical analysis to give us the best possibility of making money in the future. We're not looking to risk half of our account on options trades. These are ideas, and they're if-then statements. If the market is in uptrend and doesn't pull back, which can screw up our setups. If the stock continues to set up in the way that we like. So that's kind of my last comment is, manage risk for yourselves. Keep in mind what you can lose when you're taking a position, not just what you think you can make. That's really all I have to say. I think most of the people that are in Mario's Discord or follow any of these videos are aware of my stance on that.
There we have it. We went over the broader markets. We went over the stocks which we have on the watch list. To recap, PLTR, ARMM, CRSP, GTLB, and TOL. If you want to live trade with us every morning, feel free to check out the Patreon. The link is down below in the description. With that being said, thank you so much, Eric, for joining this video. I have personally learned a lot from you when I started trading, and I hope people in here who are watching this video learned a thing or two from this video as well. Take out probability trades, manage the risk wisely. I will see you guys in the next one.